The future of trading is here on Robinhood. Purpose-built for how you trade. With new ways to execute your strategies and analyze, buy, and sell. Seamlessly trade stocks, options, crypto, and futures in one place.
Robinhood Markets, ticker symbol HOOD, reported earnings here after the bell. And while the stock was up 2.7% today, it was actually down after its earnings, very volatile, trading at $106 per share. And we are going to talk about Robinhood, the earnings, what it means for the market, and is it a buy right now? But guys, before we dive in, if you could please go ahead, like and subscribe. It really, really helps me out. Let's dive in. Now, you guys all know what Robinhood does. Robinhood is a US-based financial service company that provides commission-free, mobile-first platform for trading stocks, ETFs, options, and cryptocurrencies, all with no account minimums. It generates revenue primarily through payment for order flow, so, selling market data, net interest income from customer cash balances, and net margin lending, plus optional services like Robinhood Gold and products like cash for credit cards. So they're just a financial services company that started initially with commission-free trading and has expanded its TAM as time has gone on. Now, the earnings were actually really, really good. Revenue growing 45%, earnings per share doubling over the year. Insane. They beat on both the revenue estimates and the EPS estimates, and it did $989 million in revenue for the quarter. Gross margins increased substantially. Very good quarter here from Robinhood. Same with net income margins. And net income grew from $345 million to $722 million. And then the company's balance sheet, $4 billion in cash, $13.3 billion in debt. So I wouldn't call it a super healthy balance sheet. So revenue was up 47%, driven by net interest revenues as well as transaction-based revenues. Operating expenses increased 16%. So that operating leverage being built into the stock. And that is why we saw net income up 109% for the quarter. And then earnings per share up 100% due to some minor dilution the company has. The company dilutes shareholders by about 1% per year. Looking at some of the highlights for the earnings, funded customer accounts increased $2.3 million year over year and 750,000 sequentially. Total platform assets was up 99% year over year and 26% growth on a sequential basis. So from quarter to quarter, absolutely insane. Robinhood Gold customers saw a 1.5 million person increase year over year, 290,000 sequential increase, just insane, 13.1%. That is the Robinhood Gold adoption rate. So this adoption rate is increasing as customers increasing. So it really goes to show that customers are seeing value in having a Robinhood Gold subscription. And the net deposits, while net deposits grew ever so slightly from the same quarter in 2024, the last 12-month growth was 41%. So net deposits tend to be very, very bumpy, as you can see right here. Now, looking at the major drivers of revenue apart from selling for order flow or, selling data, equity notional volumes was up 112% year, and that coincides with the net income being up about 109% year over year. And then options contracts traded was up 32% year over year at 515 millions of options contracts. A couple of other highlights. You can see here that Robinhood retirement accounts under custody increased 118% year over year to 19 billion. Cash sweep increased 56% year over year. Margin booked increased 90% year over year. Robinhood app crypto notional volumes increased 32% year over year, and Bitmap exchange crypto notional trading volume was 7 billion following the closing of the acquisition in June 2025. Robinhood have had a crazy roadmap. Week after week, all this company does is just execute. And as a result, they did increase guidance, I guess. The company doesn't guide for a revenue or net income figure. What they really do guide for is operating expenses and stock-based compensation. And I guess this increasing is probably a signal that revenue and net income by extension will increase with regards to 2025. A bit vague, but it is what it is. Now, Robinhood previously projected 2025 adjusted operating expenses and stock-based compensation of $2.085 billion to $2.185 billion. However, with $65 million in expected costs from the Bitstep acquisition, primarily classified as adjusted operating expenses, they've updated their outlook range to 2.15 billion to 2.25 billion. So they've increased that just a little bit right here. And I guess you can expect very much the same when it comes to revenue. So this is essentially a guidance raise to a degree, but take it as you will. So what is the outlining thesis when investing in Robinhood? Now, Robinhood is transforming from a trading app into a full service financial platform aimed at younger mobile-first investors. Its long-term growth thesis rests on expanding services like retirement accounts, cash management, and crypto, which can increase revenue per user and boost retention as the company scales. It's showing early signs of profitability, obviously, and operating leverage while still benefiting from interest income, crypto spreads, and payment for order flow. Despite regulatory risk and competition, Robinhood offers optional upside if it successfully becomes a financial hub for the next generation. And you can see that, as we go along, Robinhood is slowly moving into banking as well with their Robinhood Gold Card. The problem I have with this is, when does Robinhood start trading on a bank multiple, which is anywhere from 9 to 12 times earnings? The stock currently trades at a forward multiple of 44 times. So, if banking does become a bigger part of their business, right, eventually this is going to get a bank multiple in the very long term. At the same time, the company is buying back stock. The company initiated a $1 billion share repurchase program in Q3 of 2024. In the first year so far of the program, Robinhood have repurchased $703 million at an average share price of $34 per share, which is absolutely crazy. The stock right now trades at $106 per share. So this has been very accretive to shareholders. We'll see how the board adjusts their share buyback program based on where the stock is right now. But this is the underlying thesis: the company to buy back its stock, to get into banking, expanding its TAM, and still to be the number one app for youngsters and to have them grow into a massive wealthy customer as they get older. And that is the ultimate thesis when you are investing in Robinhood. But what does the valuation say about the company now? And what does it mean for the future? So right now, the company is trading at a 44 times PE ratio. Very, very expensive. You can see a lot of this run we've seen up has really just been the multiple expanding and, the market hoping that the company grows into this multiple. It has a shareholder yield of 1.36%. And this is essentially what it means. So if we take the trailing 12-month revenue, right, of 3.2 billion, and that grows at consensus of 11% every single year to 5.5 billion. Net income margins grow from 27% that I think is above consensus. I think they can get there. We'll see. That means net income in 2029 is $2 billion, right? So with a PE currently of 44, we're going to use a 25 PE in 2029. Again, getting into banking, you should see the multiple contract. Looking at an enterprise value of 50 billion, the net debt of 6.4 billion. And then if you divide that by shares outstanding, I'm assuming shares outstanding stay the same. You get a stock price in 2029 of $57. The current price is 106, which means the compounded annual growth rate is 11% for Robinhood. So is Robinhood a buy at 106? No, it is not, especially with consensus 5-year revenue growth projections of 11%. Essentially, what Robinhood has done is brought forward 5 years worth of returns in 3 months. I love the business, not the price. And this is what I mean. The stock has absolutely rocketed up from about the $30 mark at the tariff tantrum lows to where it is right now, $106 in earnings per share. And so, there's been a lot of multiple expansion. And I do think this stock looks very, very toppy. These were blowout earnings and the stock barely moved. I do think the stock is going to come lower. Now, if the stock is to move lower, a first base of support would be around the $78 area right here. Is this low volume node. As you can see, low volume nodes often act as support. So a level of support could be formed at this level. However, if we break the $78 level, I think here at the $63 area will be the next level of support where we put in these all-time highs before this massive rally to the upside. So this is ultimately what I see. This is ultimately what I envision for Robinhood. It's just a bit of a multiple re-rating and a digestion of this massive move to the upside. Now, my numbers are consensus. They could be upside to those consensus estimates. And all Robinhood has done is outperform the consensus estimates since like 2016. So there is that. When you look at what the analysts think, the average analyst has a buy rating on the stock with a high target of 125, which is about 14% from where the stock traded at the close, an average target of 83, which is down about 14% from where it traded, and then a low of $32 per share. So look, ultimately the risk to reward based on analyst consensus is to the downside right here. So I would not be purchasing Robinhood at the moment. If we get back to that $60, potentially $50 mark, that's where I would look to potentially go ahead and buy Robinhood. But if you're a technical trader, you'd want to look at the $78 region first, then the $63, $64, $65 region and go from there. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit that notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.